I've been investing full time in crypto now for 8 years, and I've been constantly working on my strategy. I was lucky enough to make life-changing amounts of money early in 2018 when I invested into the metaverse and got out near the top in 2020, 2021. But one of the biggest reasons I was able to get out near the top was having a dialed-in strategy. Now that strategy has consistently evolved and changed, and I want to share with you my updated crypto strategy today for the remainder of 2024 and beyond to build a long-term sustaining crypto portfolio and maximize the returns in the short term. Now, quick disclaimer, my portfolio is quite large, and for some of you that have a smaller portfolio, it may not be as relevant, but for some of you that are in that $250,000 plus into the millions of dollars, hopefully this strategy resonates, and hopefully it's a bit of a breath of fresh air amongst the nonsense and noise that I see on crypto YouTube influencers. I really like a simple strategy. I'm going to really try and dial it in for you today so you can take this away, build out your own strategy, and ultimately win in crypto. Now, as I'm going through this, if you need help with your own crypto strategy, you can book in a free session with one of my team, and we can actually help you through our 10-step process, completely free, no obligation. We'll walk you through how we help all of our clients with their strategy. And if it's something you resonate and you want help with, you can see our services on that call below. So click the link below and help you out. Now, how does my portfolio strategy look like, and where do I even begin? Well, I like to start with my goals. Where do I want to get to? So many people just start with the short term, the intraday. What am I doing right now? I look into the future and then reverse engineer how I'm going to get there, right? So with my goals, I like to have 3 goals. I like to have my bearish goal, my base goal, and my bullish goal. The reason I have 3 goals, specifically in crypto, is because we don't really know how crazy things can get, and I like to tick off my bearish goal as soon as humanly possible. Now, in the previous cycle, my biggest goal was to sell enough crypto to reinvest and build my company Collective Shift, which I was able to do that. And one of the best things about having a goal is it gives you an emotional reason to actually sell your crypto at the peak. For a lot of you that have been through, 1, 2, 3, or 4 cycles now, you know how crazy it gets at the peak of the cycle. And if you don't have an emotional reason to actually go and sell your crypto, then the most likely thing is going to happen is you're going to, let it ride, think it's going to go up forever. You'll miss the top of the cycle and you'll wait another 4 years. So by having a goal, it gives you that emotional and logical reason to sell because you have that number in your head of what you need to get to achieve that goal. Now, what are my goals for this cycle? Well, my absolute bearish goal, meaning the base case that I want to achieve in this cycle, is to buy a property for my mum and dad. That's always been a goal of mine. I want to give back to them. They've given me so much. And that for me is a great way to do that with still giving me that investment of property where I can then leverage that for future investments. Right now, I'm 99% exposed to crypto. I have a high conviction in this asset. I believe it's going to create a lot of wealth for a lot of people. And at the peak of this cycle, I'm looking to diversify, and property is going to be one way to do that. That's my bearish goal. My base goal is to extract enough cash from crypto in my bank to then reinvest in the next bear market. I fully expect Bitcoin to go to 150,000 US, maybe 200,000 US, and then retrace and fall back 50, 60% in the next bear market. And I want to have enough cash to redeploy in that bear market to make those returns in the next cycle again. Now, do I think the returns in the next cycle will be as big as this cycle? No, I don't believe so, but I still believe we're going to get outsized returns in a complete bear market when everyone's given up. Some of those assets like Bitcoin, Ethereum, and some of those new altcoins that we'll invest in down the line, I believe will have great returns. That's my base goal. Now, my bullish goal, if things really get to a point where, the market's really explosive and I can achieve this goal, this is where I can really set my life up. Okay, so the goal for me from a bullish case is to have enough cash invested into a private fund, an equities fund, a stock portfolio, probably with an asset manager, where I can earn a full-time salary to pay for all of my living expenses regardless of the crypto market. That would be the ultimate goal, right? If everything goes to shit, business goes to crap, the market goes to crap, I have something external to crypto where I'm able to earn a living just off the passive returns of those investments outside of crypto. If I can achieve that, then my life is completely set up, risk adverse, no matter what happens, okay? I've still got my business, I've still got my crypto portfolio, but I've got that as another diversification. And then as we go into the future cycles, I'll be looking to leverage that stock portfolio, leverage my properties or property to build my properties. And that's what comes into my overall strategy. I think about my strategy as a barbell strategy, right? On the left-hand side, I want to build build and accumulate as much Bitcoin and property as I physically can. I believe Bitcoin and property are the two assets that you want to hold for a long period of time. It's going to be a hedge against inflation, and it's also going to give you that capital growth over the next 10, 20, 30, 50 years that no other asset, in my opinion, will do. Even gold, right? If you look at gold over the last 5 years, has not beaten inflation. Even in the last year, nothing has been able to outpace that outside of a limited number of assets, including Bitcoin and property. So with my portfolio long term, I want to build up my Bitcoin property because I believe as well financial sovereignty will come by holding as much Bitcoin as you can. In the future, you're going to be able to lend your BTC out, you're going to be able to earn a yield on that, you're going to be able to live and loan against your Bitcoin without having to go to a bank. I fully believe by having enough Bitcoin, you'll be able to buy a property, you'll be able to live your life fully off not having to sell your Bitcoin. And really, if it boils down to it, if we look what the rich do outside of crypto in the real world, this is what the best of the best do. This is what the top 1% wealthiest individuals do. They have a large number of asset-heavy, asset-rich on their portfolio, and they lend against it. How do you do that? And why do they do that? Well, they don't have to sell their properties. They don't have to sell their assets. You sell your assets, you have a taxable event. But you can loan against these assets that isn't a taxable event, and you can get the cash for that and pay that interest back over time without having to sell your assets. And this is what the rich do. This is how they make their money. This is how they avoid so many taxes. Now, disclaimer, I'm not a tax expert, and it's different for every jurisdiction, but this is just a basic rule that a lot of the rich do around the world, and this is where I believe that the space will be going down the line when you're able to do this with your Bitcoin as well. Now, to build up that over the short term, so this is my long term, right, left hand side, to build up my Bitcoin and property, I think about altcoins and the other area of crypto as a way to leverage up my portfolio to build my Bitcoin and property, right? So I'm using altcoins to leverage this cycle to maximize the profits in this cycle to build up my Bitcoin and property stack. Now, in the top of this cycle, I want to sell as much of my altcoin positions as I possibly can. You really don't want to be holding altcoins in a bear market. When the market corrects and we start to go downhill, Bitcoin tends to outperform 99% of the market, okay? We've got to remember that altcoins are like leverage positions on Bitcoin and ETH. If Bitcoin and ETH go up 20 or 30%, your altcoins are probably going to go up 40, 50, 60%. Same on the way down. If Bitcoin or Ethereum goes down 20 or 30%, altcoins are probably going to go down 50 or 60%. So at the peak of this cycle, I want to be selling down the majority of my altcoin positions. I may still hold ETH and Solana, but I definitely will be selling the rest of my altcoins. Not to say I don't believe in the space, but fundamentally in a bear market, people get super bearish, we become risk off, and everyone just wants to dump their altcoins. You don't want to be holding those in a bear market. Now with my Bitcoin, I'm going to be probably selling perhaps somewhere around 50% of my Bitcoin stack into cash and keeping the remainder of my Bitcoin, right? Reason being is that I believe Bitcoin again will probably get to really overbought territories in the $150,000 to $200,000 range, and will have that big retracement, and I'll want to reinvest and buy back in at the lows. So I want to continue to hold Bitcoin as long as I can, but I want to take the opportunities of the short term to maximize my profits and reinvest at lower prices. Now in the short term as well, I'm continuing to add to my crypto portfolio. Now as a business owner, some of you might be business owners, I use the cash flows and profits from our business to be able to build up our crypto stack. And I'm actually investing off our balance sheet. This is a great strategy that we look at. Someone like MicroStrategy at a really big scale continues to move cash off his balance sheet into BTC as a hedge against inflation. And obviously for him, it's done amazing for his stock price. Now for a lot of you that run small businesses, maybe you're entrepreneurs, maybe you are running some larger businesses. For me, investing off our balance sheet is a great tax efficient way to invest without needing to move it into my personal name. And it still is a great hedge against inflation, and it's a good way to balance the balance sheet by having some other assets there as well. Now, for some of you that don't have businesses, that just have a salary or you have extra cash, this is where you can funnel that cash into crypto, whether it be buying Bitcoin and building up that stack, or whether it be building up your altcoins in the short term to leverage that to build your overall Bitcoin and property stack. That's a great strategy, and it's something that I believe a lot of you should be thinking about. It's just a dollar cost averaging recurring way to continue building up your investments. Now, some of the biggest mistakes I've seen people make when building out a strategy is they don't think about what's going to happen in the future. They're very reactive, right? So one of the things I've seen people do at the peak of the cycle is they sell their altcoins for other altcoins. There's new things that come into the space. One of their favorite influencers talks about a new coin, and they start to sell down their altcoins to buy other altcoins. coins, right? They start chasing the returns. They're not getting the returns that they want, so they start chasing these coins. Number one, for most of you, that's a taxable event. So you're getting taxed at the price that you sell that asset to buy that other asset. Now, if you buy that other asset and that goes down, you still have that taxable event at the time you sold it. And now you have a new asset that's worth a lot less, and you now need to pay that tax bill with that asset that's gone down, right? So please be aware when you're selling your coins, tax is a big component of your strategy. Depending on what jurisdiction you're in, especially in Australia, you can be burnt quite substantially. So make sure you get some tax advice, especially if you're in Australia. You have that 12-month capital gains discount, where if you hold your asset for over 12 months, you can save up to 50% of your capital gains. And if you're moving assets around asset to asset, I'd really recommend putting some cash away, fiat or stable coins, into another account so you can pay your tax down the line. Now, another problem or mistake I see people make, especially if you have a large portfolio, is that you're selling these assets on the spot market on your current crypto exchange. If you're buying and selling on the spot market, which is just your everyday, Binance, SwiftX, CoinSpot, Coinbase, whatever it might be, you are getting hurt by fees, right? It may be up to 1% fees to make the transaction, but more importantly, where the exchanges are making most of their money is in the spread. Sometimes you can be paying up to 2 or 3% in the spread, right? So if you go and make a $100,000 transaction, you can be losing up to 3 or 4% every transaction, okay? So please be aware of that. If you are looking to move larger amounts of money, you want to look at something like OTC or over the counter, okay? OTC is where the exchanges are finding other buyers or sellers the other side of the market, and they're giving you the best spreads and fees available on the market. Now, that isn't available to smaller transaction sizes. Normally, OTC isn't available until you have more than $25,000 per transaction, but please be aware of that when coming into selling your assets or buying your assets, amongst your strategy. Same thing goes with lower liquidity assets on something like a Uniswap or a decentralized exchange. When moving these assets around and selling them, liquidity can also be a problem if you're selling a large amount. So if you have a lower market cap coin and you're trying to sell a large percentage of it, you get what's called slippage. And the slippage is just the liquidity available in the decentralized exchange where you can't actually get all the asset out at that price. So you may need to split the investments down chunk by chunk as you're getting out. So that's just a couple of mistakes I see people make. On the other side as well, as you're building up your portfolio, if you have large amounts of cash on the sidelines, my strategy is I'm starting to dollar cost average on a regular basis, but sometimes you get those larger opportunities. So recently in the last few months, Ethereum dipped to 2,800, 2,900. We had about a 30 or 40% correction. I felt that was a really great time to lump sum invest, right? So the real core difference when thinking about investing cash into the market, and this is a part of my strategy, is there's two main ways. You've got the dollar cost averaging, which I look at as a more regular way to just add cash in the market, whether that's coming from your business, your cash flow, your salary, other investments, whatever that might be. That's like a dollar cost averaging method, right? Where you're just buying little amounts or medium amounts regularly. You've also got the lump sum opportunity. Now, the lump sum opportunity, I don't do regularly. I only do when I think there's big opportunities in the market, when we get those big corrections, when the fear and greed has gone way into the fear, we get sentiment really on a negative level, but still fundamentals are quite strong, okay? When I see those opportunities, I'll make a lump sum investment, and I'll usually do that in the higher market cap assets, something like Ethereum and Solana. So recently I made a larger investment in Ethereum, and that's to build up my portfolio, especially in those down markets. I don't tend to do large lump sum investing into altcoins unless we see real blood on the streets and I know that a bottom is forming. One of the other mistakes I see investors make is they get too impatient and they'll buy the dip before the dip has finished, right? So they'll buy a large percentage of Solana or maybe something like an Aave or a MakerDAO, but we haven't seen the local bottom form. Now that's okay if you have a long-term perspective, but for some of you that may be a large commitment to invest $100,000 into a coin and then see it dip 20 or 30%. Now that has happened to me before. It is okay as long as you have a long time horizon. It's okay, but just be aware when you lump sum investing into an altcoin, there is a lot of volatility. So there's a high likelihood that you may see that price dump or correct over the days and weeks following, but it's important just to remove the emotion out of it. Remember, it's a long-term investment and you're going to be okay. Now, if you don't have more cash on the sidelines and there's new altcoins you want to add, you don't always need to use more cash to buy, right? This comes back to the consolidation or, moving of your current assets around to buy new assets. Now, it's important to not make the mistake of just continuing to chase new coins, because what can happen is that you actually burn down some of your better assets to buy the worst assets in those FOMO, hype-inducive environments, thinking that you're going to make more money by buying these coins. So a part of my strategy is to have a section of Ethereum to buy some of these altcoins as they come in, which I've done recently, right? I bought into a pre-sale, I had some Ethereum on the sidelines, and I used a percentage of my Ethereum to get into that pre-sale. Now, again, the mistake I made in the past, especially back in 2017, when the ICO days, was that I burnt down a lot of my Ethereum chasing these new coins. And then a year's time, you look back and go, wow, I spent X amount of Ethereum. Look at these crappy coins I have. None of them have really done anything, but I just got caught up in the moment. So what I like to do is, if you don't have a lot of cash on the sidelines, but you still want to take advantage of some of those opportunities, is just have a section of your portfolio that you're willing to move, especially maybe something like ETH or Solana, to allocate to those new investments. Now, with that, I'd probably limit those new investments to one a quarter, maybe one every 2 months, so you're not continually chasing these new coins, because there's more and more coins being added every day. You cannot have every coin in the world. You need to be very, very clear and concise about your investments so you don't burn down those assets, because I guarantee what's going to happen is you're going to look back in a year's time and go, wow, I've just spent all my Ethereum on all this nonsense. Why did I do that? Okay, so if you want to portion up 15%, 10% of your Ethereum or your Solana to invest in those new coins. Now, the other thing that you need to be aware of and can be considerate about is your psychology. And this is actually a part of my strategy. Your psychology is something that you need to be able to manage, because the hardest thing about crypto when it comes to actually making decisions is making the right decision. And usually a lot of people will use emotion to drive their decisions rather than logic. Okay, they'll listen to their friends, they'll listen to YouTubers, and instantly you see like the market correct 5 or 10%, and every YouTuber you've read, bleeding faces, sell everything now, right? Or the market goes up 5 or 10%, we're all green, it's happy, it's going to $1 million, okay? Buy into that stuff, you're going to make poor decisions. You need to make sure you're basing your decisions off logic, data, and also that accountability, okay? If you're on your own and you're trying to do this, while running a full-time job or your business or a family, it can be very, very difficult to make the right decisions. So remember your psychology, use data, don't get caught into the FOMO, and have an accountability partner or group. Again, something that we really worked hard on at Collective Shift as an independent business that we help our members is really giving you the accountability and the support needed when it comes time to sell, to know the right time to sell, to get out at the right time, and give you that confidence and accountability to make that decision. Because I see so many of you, when it comes to crunch time, you don't end up pulling the trigger because you think it's going to go higher, you think you're going to make more money because everyone's euphoric, everyone thinks it's going to go up, and at the end of the day, that is the absolute biggest red flag signal to get out, because it's near the top, and if you miss the top, again, the market's going to dump really quickly and you're going to be waiting a long time. So make sure your psychology is dialed in. You know when it comes time to sell, you actually make the call. Think about where you are right now. Think about your goals. Go back to the strategy that you built. Think about where you want to get to and make sure you're delivering on those goals and you're getting out at the right time. So when looking at a strategy, there's so many components. These are the major parts. You need to have your goals, your risk, timeline, short-term and long-term strategy. You need to have your portfolio allocation, your sell strategy, your buy strategy, tax structure. All of these things are super, super important, which I've built out. I haven't shared all of that with you because we go into a lot of detail, but the most important parts are shared with you in today's video. We've also got a free 10-step crypto strategy template, which I'll put in the links below. Make sure you check that out. That goes through step 1 right through to step 10. We've got some links in there and some resources to help you out. And if you want our help, if you want some of our team's help to help you build that out, book in a call below. It's a 30-minute awesome session. We've helped so many people, thousands of people through, and help with their strategy. And I do truly believe that it can be the difference between winning and losing crypto is having a proper strategy dialed in. So hopefully that's been helpful. Book a call if you need some help. Otherwise, I'd love for you to share this video around. Leave me a subscribe, and I'll see you on the next video. Thanks, guys.